Hi everyone, my name is Anne-Marie Band. Today is Wednesday, June the 14th, and this is the Moneyball Morning Report midweek for the Benzinga Pro platform. We're going to start with the ES, and it is continuing to move higher. Notice what's happening. Every pullback gets bought. Look at the slope of motion right here. It is very, very bullish. Now, overnight, when we put it into the daily space, we can see that we are sitting just above the close of the prior day, and the dips below have also been bought. So this morning, the line in the sand to watch is this 44.13 area. If we lose that zone, sellers are going to get a little bit more excited about getting themselves involved. So the interesting part, the last 4 or 5 Fed releases, what's happened is that the release comes out and then we have the presser, and because the presser is usually more hawkish, meaning more bearish in tone, we generally fade off of that level, but we expect some whipsaw, certainly. The levels that we have not retraced in the last breakout area, which is right around here. This is a very big breakout zone at 43.48. That's going to be the zone that we say, all right, if we begin to fade off of these levels, it is very likely that we move into that space. Let me see if we've got, hang on. Okay, continuing on. I couldn't find what I was looking for. So let's take a peek at something tighter. Let's take a look at a 2-hour. What we can see is the chart has been going higher, but we've got supply up here that is not being taken out. And so the chart is going to very likely come back into one of these zones that they are looking for. What we have to look for is to see where the buyers come in here and whether they're able to push over this edge to see if we're going to have continuation. Certainly our slope says that it should, but this is really the key area for us to watch from a daily perspective. Let's take a look now at the NQ. Moving specifically the same sort of way, coming up into heavy congestion or heavier congestion right around this area. So we are still looking at regions where price action will come into overhead supply that has not been taken out. But what's normally happening, take a look, what happens when we get into the resistance zones in this current environment, we fade at the first pass and then buyers come into the rescue almost right away. So now these are the regions that we're looking for, right? The baseline of support here. Supply is sitting up at the top here. This is yesterday's close. We're sitting just underneath it. Where are the key breakout areas? Anywhere from this 14,873, all the way down to here, right? But first, this is the area that they're going to test. That zone right there before they head down. So my suspicion is that we sort of leak into the news and then we bounce. But again, notice here, first thing that's going to happen is traders are going to come in and say, I think I want to buy here, right? And so far, that's what they're trying to do. Now, the question is, do they take the bid and move it up? That's really what we're going to have to watch, right? Can they take that bid up and say, all right, I'm getting up over this edge? Otherwise, if the bid can't move price up, it's going to push it down into the other levels, right? And that in-between zone is right at the round 15,000 number, right? Maybe somewhere around here. Right, 15,013, and that's what we're going to have to watch. All right, Let's take a look at SPY. Let's clear all these. Well, no, we'll leave them. We'll leave them because we are going to walk through this kind of noise. Notice what's happening at every resistance patch. Or actually, I'm going to remove all these horizontal lines. Okay, notice what's happening at every time we look at prior resistance. The price action pushes a little bit up maybe, but then fades and then buyers come right in. We're going to expect the same thing. Here we are at resistance. So we're going to anticipate sellers that show up around the 437 area, right? And then, sorry, I keep hitting my mic with my hands because I'm a big hand talker. I apologize about that. What happens is we get into these resistance zones, price action fades, and then buyers come right in. So what's happening with this fade? Here we have a new high, we have a lower high and a lower low, and now a lower high and a higher low. So we know that this area at around 435 is going to be the key zone. I say wait for it, right? If you want to trade this line at the 435 and you're thinking to yourself, I might be able to get myself a short here, you could position the short above at this maybe 37.18 line, take the short and then watch to see if any bids take it up over the top. If the bids take it up over the top, it could rise to the next level in the congestion zone. And that's going to be, 437.60, 438, something like that. So certainly that's what I would be looking at. Take a look at all the gaps. This has been such a gappy, so gappy. Let's see, from this to this. This whole scene here is a little bit gappy. We fill in, but with very little volume. It's just an unbelievable mess of price action that continues to gap and gap and gap. Now here's the thing, all gaps do not fill, but a lot of gaps fill. And so what we have to start thinking about is, where is the pressure point going to show up that says, hey, we got to give back some. And for me, it's always going to start with the break of that support. If we lose 435, the wicks came in at 434.60. So you've got this shot here, but it really starts above at the double top formation. So if you're looking for some kind of short that will be a quick trade, a scalp, this is going to be a scalping kind of trade, you would look for a double topping formation, like the one we have here, and then you would have to watch it to make sure that traders were allowing price action to discover lower, or else you get out, okay? So if you're looking for that edge on a 5-minute, that's going to be here. Here's the beauty of what it is that I'm showing you, folks. You can use it on any chart, on any time frame, in any way. The only thing you have to watch for is, when you take your trade, do people follow along, or do you lose that region and it comes in to test? So down here, let's say you decide you want to go long at 436. It does not, 436.16, it does not need to lose 436. If it loses 436, it means the weakness under here is building, and they're very likely to go test that 435.64. Okay? That's what we want to stare down today. For these guys, 363, the Qs are coming up. What happens every single time this chart comes into resistance, folks? Every time. Literally, it comes in, dips lower. Look, we have resistance right here in this area, and we had resistance right here. Now, I mean, it dipped lower for a second, and then went off the rails, moving so much higher. So very, very much higher. That is showing strength in the chart. Let's take a look at the daily very quickly. We can see that we've got a little bit of a doji forming, but again, look at all these gaps. Gap, gap, gap. All right? This is well above the close of the prior day. That means two things. Overnight action is pressing higher, but then it's going to have this fade and people are going to buy. Every single fade has been bought. So trade the pattern, not what you think should be happening. Trade the pattern. And the pattern says buy the pullback. Okay? So if you want to say, well, Anne Maria, how much do I wait for the pullback? Listen, look at what's happening right now. In the last several hours, 8 hours of motion, we've had a high, a lower high, another lower high, and another lower high. But although we made these lower lows, they keep getting bought up. So my thought is, if it comes into this area, it's a buy. And guess what? You immediately start to watch. You know what your risk is. Maybe it's 359.50. You watch for the traders trying to catch the bid. How does that look? We can go to our 5-minute and see how it happened in the overnight. Let's take a look at it, right? Look at them catching the bid. Right here, let's say you took it at 361.50. It faded, so you put your somewhere down here underneath this wick if you're trying to buy the dip, and then you watch for it to give you some higher lows. If it gives you higher lows, stay in the trade. If it breaks the low, get out of the trade. So for instance, right here, let's say you want to buy this, right? You don't know it's going to break down. You think it's going to break out. So you buy this and it moves up. And then it moves down. It cannot catch a bid up here. So what do you want to do? You want to position yourself so that you go, hey, listen, if I get here and I push up and I cannot catch the bid, my stop has got to be here, because if it doesn't, my price action's going lower. The great thing about using a ribbon is that when it bounces into the ribbon, you can sell that ribbon and you go, okay, my short stop is going to be, my last breakdown area right around here. And see, it's trying to break out through this edge, but it's not getting any traction. What it is, however, doing is making higher lows. So what happens anytime a chart dips? It comes back into the support holds the region, and then it pulls back for another higher low if it's going to hold. Otherwise, it breaks down. So watch the pattern and let it tell you. Don't use anything else. Just watch the price. When you watch the price, it'll tell you where people are going. And believe the price, right? A lot of us watch price, we don't believe it. But price wins every single time. All right, folks, the next one of these will be, I don't know, Friday, I think? We'll see how it goes. Good luck trading today. Be careful, it's an FOMC day.